Hi and welcome to the Market Alert for Tuesday, the 3rd of October 2023. So a bit of volatility yesterday and carnage in the dollar and the metals, carnage in the metals and bullishness in the dollar, which I haven't seen for a long time and I expect to continue as well. But first, let's have a look at the headlines. Bonds and bullion and black gold battered as hawkish Fed speak and inflation fears lift the dollar. So there's a chance of more rate hikes now, 24 hours later after Powell spoke yesterday. US stocks traded mixed as the dollar and yields surged, and the implied volatility, which we've not looked at for a couple of days, you can see that's at 1375. The correction is now in progress. As I mentioned before, when you get down to these lows you get corrections, and there you can see that. The bottom of this move, if the volatility continues to increase, will be around 18 to 20% on the implied volatility. So until that happens, the market remains on the bearish side at this time. Right, let's move along. Have a look what we've got out today economic news-wise. We've got German bank holiday today. Just watch the spreads if you trade this, because on a German bank holiday I've seen where the spreads don't actually get switched from the overnight to the day session. So they could actually be wider, so check before you trade. And then we've got the jolts opening at 3 p.m. That's all there is today. So the market might be able to manage a bit of a rally back. Just depends what else comes out and how negative the markets want to play the Powell comments of yesterday. Okay, let's have a look at the markets. Kick off with the Dow and work our way through to the metals. So in the Dow, this down again yesterday, taking out the low that we had last week. We've got a new low in place there. We're down on the overnight as well. In the 30-minute chart, we had a bit of a move to the upside, and then that same pattern again. We're seeing the markets being moved down. The low is down here. Keep an eye on this, and also watch for the market on the upside to close. The 50 EMA and the Dow, sorry, the DP, not the Dow. We're looking at the Dow a bit earlier, and so watch those levels. And we're also sort of oversold-ish there as well. But an interesting development, as you can see yesterday as well, when Powell was speaking as well, what impact it had on the market there. And in the German DAX, the low of yesterday is already taken out, and the low here, which goes back to September the 27th. So that low is already breached. That said, it wouldn't take a lot for the market to try and screen back above this level. So be warned at the open. It could actually see that actually happen. In the S&P 500, well, doing better than the Dow. It hasn't taken out the 27th low. Sitting at the 200 MA, 62 retracement there as well. To support the market at the moment. It just depends again what happens when the markets open this morning. With Germany closed, it will certainly be an interesting one. We've got the move up and then down, then Powell, and then you can see that we're stuck at the DP, the 200 MA, and also the 50 EMA. If you were trading the S&P, then you want to come down to this low to here, and these will be the downside targets for the S&P 500. Meanwhile, in the FT100, also declining now as well, having sat at the top there quite comfortably, having breached that 200 MA. We're now moving down towards the low of this bar here, which goes back to September the 11th. We've also got the 78 and 89, just in case prices continue to move lower, but we are oversold in this market at the moment. In the FT100 30-minute, we're sitting at yesterday's low. We're trying to bring the market back at the moment to keep it above yesterday's low, because a break below the previous day's low, as you can see here, tends to see the market move sharply to the downside, particularly given the backdrop of the markets at the moment. In the US dollar, again, big move to the upside yesterday on Powell's comments. We have got a serious up move going on here as well. If you look at the weekly chart, you'll see the green bars all the way, not a single down week at the moment for the US dollar, going back to, let's have a look at this, 17th of July, so back to the summer there. So strong move in the US dollar. 114 would be the upside target, which will monkey hammer the metals markets a lot lower. So let's have a look at those. So yesterday, as I said, it's going to continue to get hammered. We're going down to $20 and below. More like 17, I think it was yesterday when we looked down to this sort of level here, 1750. Wouldn't surprise me one bit at all, given that the dollar could go to 114. So yeah, even though there's a bit of climatic volume there at the moment, don't expect a lot. Even if you get a bit of a bounce, we'll soon resume and send it south, particularly if the inflation rhetoric continues. And as I've always said, the inflation numbers are like bull markets. You get them moving up, you get a pullback, and then you get another surge. And I think that's what's sort of brewing in the background here. And then rates will have to continue to move higher. So silver hammered to the downside yesterday, as was gold. You can see now they're really giving the gold market some welly on the downside. And the 30-minute chart, very choppy, but consistently moving lower, as you can see there. And a bit of a bounce there, way below the low already of yesterday. Let's finish off with the gold-silver ratio. Very interesting pattern in here from yesterday as well. Just take a look at that for a volatile day. I thought Friday's was volatile, but that was nothing on yesterday. The decline in the silver price was rapid. And again, let's just squeeze these bars up so we can see where we are. Like I said, we're going up to the 92 level for sure. That's going to be the first target, and then after that we go to 120, which we saw during the COVID crisis there, which is just slightly above it. There was 96 is actually one before that. There it is. Should have just changed it to a weekly chart, but you can see when you squeeze the chart up where we're at, they won't let this market go down below that sort of 74 level. Then it became 78, but they'll certainly let it get above 95. Okay, that's it for this one. Like I say, the Germans are off today, holiday in Germany, so just watch the spreads and the activity in the German DAX for that very reason. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.